Nvidia shares are in correction territory after falling more than 10% from a closing high in early November. Joining us now is John Vinh, KeyBank equity research analyst. I like the way you approach this, John. It almost reminds me of a Ben Franklin close. You've got everything I could possibly use. You got a bull case. You give me what your bullish fiscal year 26 earnings per share estimate is and what a premium multiple would look like, and then you give me the reasons why. And you've also got a bear case with a lower multiple and a much lower earnings per share estimate. So nobody really knows, and you've given me a lot of reasons for both. What you finally come to, though, is that you're overweight the stock with a price target of 180. Let's go over some of the bull and bear case. The latest earnings was pretty solid, and so was the outlook.
Yeah, that's correct. These guys continue to put up numbers that are above expectations. You see continued upward revisions in estimates. They're on the verge of kind of ramping a new generation product called Blackwell, which is going to give, provide them with kind of a step function uplift in terms of kind of the pricing that they're going to get, and also just the performance in AI trading for their customers.
Early Tuesday saw a more than 2% decline in Nvidia's shares as investors were wary that the AI expenditure that has propelled the company's growth would slow down or trickle down to competitors. The AI chipmaker's stock was down almost 14% from its closing price of $148.88 in early November, which was a record high. As big tech fully commits to generative artificial intelligence, Nvidia quickly rose to the top of the industry from a graphics card manufacturer mostly utilized for video games to the top supplier of AI processors worldwide. In early November, it overtook the once dominant Intel in the Dow Jones Industrial Average, and in 2024, it changed places with Apple as the most valuable business in the world. In a report released this week, Wedbush analyst Dan Ives stated that he anticipates Nvidia's market capitalization to reach $4 trillion by 2025. However, after its record close in November, Nvidia's stock started to decline when remarks from Google and Microsoft suggested that their future investments in AI would increase more slowly. Its latest Blackwell AI servers were rumored to be overheating, which fueled concerns about additional production ramp-up delays and further depressed share prices. The stock's trajectory was not helped by Nvidia's most recent blowout earnings announcement, which exceeded the already lofty expectations of bullish analysts. China's competition watchdog announced last week that it had opened an antitrust investigation into Nvidia's $7 billion purchase of networking technology firm Mellanox, further compounding the company's problems. The competition is intensifying in the meanwhile. In an attempt to compete with Nvidia, Amazon said in early December that it was constructing a supercomputer using its new servers and its own Trainium AI chips. Although analysts have stated that Broadcom's success won't come at Nvidia's expense, the company's most recent earnings report stated that agreements with hyperscalers to supply its custom AI chips, known as XPUs, will generate up to $90 billion over the next 3 years. This statement sent the stock skyrocketing and Nvidia's stock in the opposite direction. The PHLX Semiconductor Index, which comprises the stocks of Nvidia and other chip makers, fell by around 2% on Tuesday as well. Despite worries that businesses have not yet seen a significant return on their investments, the costs of AI for big tech companies continue to rise to enormous amounts. In its most recent quarterly report, Microsoft's capital expenditures nearly doubled to $20 billion from the same period last year, while Meta's expenses increased 36% to $9.2 billion. Google's capital expenditures increased to $13 billion, a 63% increase. According to a recent Gallup poll that Bloomberg quoted, only 4% of U.S. professionals actively utilize AI on a daily basis. In a letter to investors on Monday, Samik Chatterjee, an analyst at J.P. Morgan, stated that concerns about a slowdown in AI spending seemed to be unfounded, although he also conceded that 2024 was probably the high for the percentage increase. According to Chatterjee, The largest hyperscalers' investments in AI-related infrastructure increased 57% in 2024, but are expected to increase by 30% in 2025 and 25% in 2026. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
And you give a lot of good reasons. It's going to continue to outstrip competition for GPUs and AI. If the company were able to earn $5.30, your high-end estimate, and you put 38 times that, you could get to $200, although you've got a 180 price target. Let's talk about the bear case, because no one ever really, we don't hear that much. But if it instead of $5.30, you think the downside possible earnings per share miss would be $3.50, and if you put 29 times on that, you're all the way down to 100. So you can get to a range of 100 to 200 on what's fair value. What goes into the bear case?
Yeah, there's a couple things that's driving the bear case, and probably a little bit what's driving kind of the more recent pullback that you've seen in the stock is two things, right? These guys are dominant in terms of their market share in the market. They probably have kind of 85, 90% share. So if you are a customer of Nvidia, you've got two alternatives right now, right? You can buy another merchant solution from, probably the second biggest merchant provider of AI silicon is probably going to be AMD, or you can kind of build your own, like Google has with its TPU. So, I think what's driving some of the recent concerns is Broadcom reported last week. They've got three major customers right now that they're working with to build AI chips, right? It's Google, it's ByteDance in China, and it's Meta. And they put out a SAM forecast of 60 to 90 billion in fiscal 27, which would imply that their AI revenues are going to quadruple in 3 years. So if you kind of do the math, that would imply that is potential share loss at the expense of Nvidia, right? So that would be some of the concerns that's driving kind of the near-term pullback in Nvidia that we're seeing right now.
Following its investigation of Nvidia's 2020 acquisition of Mellanox Technologies, China's top antitrust regulator is anticipated to examine more technological acquisitions, according to an article that quoted people with knowledge of the issue and was published by The Information on Tuesday. China's State Administration for Market Regulation, or SAMR, has opened an antitrust investigation into Nvidia's 2020 acquisition of Mellanox Technologies to see whether the business violated any agreements made during the $6.9 billion deal. The analysis coincides with escalating trade and technology disputes between the United States and China. The recent move by the U.S. Commerce Department to tighten restrictions on exports of advanced semiconductor technology to China is being monitored by the Regulatory Review. China's Ministry of Foreign Affairs and State Council reportedly chose to employ antitrust reviews in response to these restrictions. Chinese authorities are stepping up their scrutiny of foreign technology companies operating in their country, as seen by the investigation into Nvidia's acquisition. Further challenges are now presented by the Mellanox purchase, which established Nvidia as a leader in high-performance computing, as regulatory supervision increases. As China and the U.S. compete for technological dominance, the SAMR inquiry reflects broader disputes in the semiconductor industry. Nvidia is facing growing domestic and international criticism despite not making any specific comments regarding the Chinese investigation. SAMR is delaying Synopsys' planned $35 billion acquisition of Ansys due to insufficient application materials, in addition to the Mellanox study. According to the source, the regulator is also looking into two coherent acquisitions that were previously approved and were referred to as NVDA because of concerns about potential violations of earlier approval requirements. However, NVIDIA continues to advance its innovations. The company recently unveiled the $249 Jetson Orin Nano Super Developer Kit, which aims to expand access to artificial intelligence. Despite regulatory obstacles, experts are generally optimistic about Nvidia's future prospects, even if the company's stock recently experienced a technical correction, falling more than 12% from its November high. Nvidia's challenges in navigating a geopolitically volatile regulatory environment are exacerbated by the findings. This is putting further pressure on Nvidia as it balances U.S. Department of Justice's innovation and compliance globally, while also investigating the company's operations for potential anti-competitive behavior. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
The next name we wanted to look at is on the flip side. We're in correction territory, and Nvidia down now in pre-market trading. Now we're up about 15% from those all-time highs that we saw just last month.
Yeah, and I saw that we officially yesterday pulled into correction territory in Nvidia shares, and like you said, now dipping actually slightly beneath those levels. It's not the first time we've been here. I think it is important to note because I do think there's a psychological level associated with seeing that you are officially in correction territory, now off those highs by about 13.7%. So again, we've been here before. I think that a lot of times this can be seen as perhaps a healthy thing. I don't think it's always read as a negative, like the way the headlines would try to make it seem. But right now, during the session we saw yesterday, it closed down about 1.7%. It declined as of yesterday about 11% from that all-time high. But the street, I think, continues to wait for evidence of really how they can continue to build out their sales of their Blackwell AI chips. After the recent slump, though, shares still do remain. I mean, this is still the top 5 best performing stocks in the S&P 500 this year. It's still up 166.5% on the year. So it's not having a bad year by any means. I think that you have to consider like the paper trail. I mean, look at Broadcom, the fantastic move we saw to kick off the week yesterday and a 24% jump to close out the week last Friday. I mean, the money has to go somewhere. I almost think the attention right now has been on Tesla, Broadcom, maybe just Nvidia taking a back seat. But again, I don't think this is a bad thing. I think that corrections are oftentimes seen as a healthy reset, especially for a stock that was pretty much at its highest valuation ever.
Yeah, you wonder, there's going to be some analysts that have to come out eventually and start, because most of the price targets here, even when it was hitting all-time highs, they've been up at 170, 190, 180. You just have to wonder, is somebody going to just come in and put the hammer down and say, well, I don't think these guys can upgrade Nvidia because they all have buy ratings on it, but price target hikes may be coming down the pipeline at this point. RSI getting close to oversold at this point, so we'll have to look at this one some more.
Following news that a voltage module it was testing for its Blackwell chip system had serious thermal problems, Nvidia's stock sent out a sell signal on Tuesday, which caused the company to drop even more. The stock's 50-day moving average, a crucial level of support, has been breached by shares. On Tuesday of last week, Nvidia ended an almost 3-month period above the benchmark by dropping below it for the first time since September 12. Following the announcement that Microsoft, a major client and leader of the Magnificent Seven, is not facing supply constraints for chips, shares continued to decline on Tuesday. The leader in AI chips revealed earlier this year in a Securities and Exchange Commission filing that 13% of its first quarter fiscal revenue came from a single customer. Timothy Arcuri, a UBS analyst, thinks Microsoft was the client. Nvidia's Achilles heel may be key customer risk, which leaves it open to changes in demand from its primary customers. Nvidia's graphic shows that this week's activity was a breakout failure. The stock has now dropped more than 7% below the October buy target of 140.76, where it first broke out. Stocks should ideally climb after breaking out of bases rather than move sideways. Does that imply that Nvidia is currently being sold? Verizon Communications revealed a new solution on Tuesday that was created in collaboration with Nvidia that allows a variety of AI applications to operate on Verizon's dependable 5G private network using Private Mobile Edge Compute, MEC. Verizon and Nvidia created the new AI-powered private 5G platform stack, a plug-and-play architecture that supports future advancements in AI computing and a range of AI and connectivity applications while fostering innovation among third-party developers. The platform can handle high-performance applications such as autonomous robots, augmented reality, virtual reality, video streaming, broadcast management, generative AI big language models, vision language models, and Internet of Things, IoT, technologies. Early in 2025, Verizon plans to start showing off the AI-powered 5G solution. It can offer these services on-site with a permanent private network or remotely through portable private network solutions. Compute-intensive applications such as computer vision, CV, augmented/virtual/extended reality, AR/VR/XR, autonomous mobile robots/automated guided vehicles, AMR/AGV, video streaming, broadcast management, generative AI big language models, and vision language models can all be handled by the stack. Early in 2025, Verizon engineers will start demonstrating this technology. In order to enable real-time AI applications that need security, ultra-low latency, and high bandwidth, Srini Kalapala, Senior Vice President of Technology and Product Development at Verizon, acknowledged utilizing its private networks, Verizon's global industry leadership in private MEC, and Nvidia's AI computing capabilities. The integration of Nvidia's full-stack AI platform into Verizon's new solution for running AI workloads on private 5G networks is a significant step forward in assisting businesses of all sizes in achieving their business goals more quickly with AI, according to Rani Vasishta, Senior Vice President of Telecom at Nvidia. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.